Anshul Saigal of Kotak Private Wealth is also with us. In fact, he is actually heading the PMS at Kotak, which is a pretty large one among the top tier ones in terms of assets under management. Anshul, good afternoon. Thanks a lot for your time. Being tilted towards small and mid caps, were you rattled the way things panned out in Iran, US? Did it give you a sleepless night at least?
Hi, Ajay. Pleasure to be speaking with you in the new year. Actually, these things, more macro and things beyond one's control, are things that one doesn't worry about too much. What one worries about is buying quality at a reasonable price and seeing it through cycles for value to get created. But having said that, to assess these situations, because they are new as they are happening, but they are also, in a sense, things that have panned out in the past, and you have certain cues from the past. You can learn from those cues. A similar situation happened in the Middle East around 2003-04. It happened in the same region in 1991. And it will be instructive to see how those events panned out to figure out how the current event will play out in the future. Now, what we witnessed then is that liquidity was pumped tremendously into the system by central banks, particularly the US Fed. And that really assuaged fears. It kind of gave a support to the markets and to asset prices. And in fact, in the 2003-04-05 period, where the second Iraq war played out, the markets were really on a tear. We saw markets going up meaningfully, both for the large caps as also for the mid and small caps. So if a similar sort of script is going to play out now, then this is not a time to be fearful. This, in fact, may be a time to actually lock in gains in various segments of the markets. So I'm actually not jittery at this time.
No, fair point, Anshul. You're right about that. I mean, these kind of issues have turned out to be points of pessimism where people should take advantage from and enjoy the next couple of quarters and years. How are you looking at the macro environment right now? We are just 15 days away from the budget. Everybody's eyeing the budget, be it expectations of removal of LTCG, which the market has feared, or looking forward to how does the government goes about managing the fisc. In fact, Jeffries, the new Mr. Woods at Jeffries was saying the market wants to hear that government will go easy on, let the fiscal targets go a little bit. It'll breathe a sigh of relief. But no ruling out of the fact that government has a tight rope, and the market is watching out very closely on how they'll walk that. What are your thoughts there?
So clearly, Ajay, what the government has shown in the past is that it's much against fiscal profligacy. It wants fiscal prudence, and over say 5-6 years, we've seen the government walk that path. So this is a tough environment that we are in just now, because also shoulders are sagging. So you are seeing the general population not going out and spending. They're feeling a little fearful about how their future is going to play out. And so they're saving for that rainy day and not spending today. It is this mindset of the public that the government would want to address through the budget. And in our judgment, to address this mindset, things like greater spending on infrastructure, greater macro spending are not going to be sort of assuaging these aspects. What is going to assuage these aspects is raising expectations and raising hope of the general population. To do that, in our judgment, this budget will try and address this aspect of what is really ailing the economy, as also spending. And there will be various measures that the government will take to assuage these fears, to bring certain animal spirits into the economy, to let people go out and spend, And one measure that clearly will be a big move in that direction will be, of course, the taxes, the personal taxes. We will have to wait and see as to how that plays out, but clearly that will be a big kicker. And then there will be pronouncements which will want to raise hope for the future. So all in all, it will be more individual-centric than macro-centric is what our judgment tells us.
In fact, that will be taken by both arms by the markets, because it's likely to spur investment, I would say consumption into the market. Anshul, I'll request you to stay with us. There's some important flash coming in which could be detrimental for Adani Enterprises. There's coal over-invoicing matter. There's a development over there. My colleague Abhimanyu is here with us with more on that. Abhimanyu, tell us what exactly has happened and what will be the next course of possible action from Adani's?
Well, the Apex Court has set aside the previous Bombay High Court order in which the Bombay High Court had given a relief to Adani, and it had ruled in favor of Adani in October 2019, and the Directorate of Revenue Intelligence contested the Bombay High Court order in top court, in which they have appealed, and the Apex Court has stayed the order which quashed the letter of rogatories, and the High Court had quashed the letter of rogatories which had sought information from different companies on the import of coal which was done by Adani, and this of course effectively revives the coal over-invoicing probe against Adani Enterprises and Adani firms. Of course, a reply has been sought from them on DRI's plea. The Directorate of Revenue Intelligence had earlier sought replies from various countries on the probe which was being conducted at length on the allegations of coal over-invoicing, on the basis of which the probe was initially instituted. It was quashed. The letter of rogatories were quashed by Bombay High Court. They have been revived today by the top court, which certainly means that the probe against Adani will continue, and the letters of rogatory will be acted upon possibly by the foreign countries from which replies have been sought by DRI, and subsequently any progress which takes place in the probe will reach its logical conclusions, and the Apex Court has paved the way for Directorate of Revenue Intelligence to proceed forth in its probe against Adani Enterprises.
Thanks very much for that, Abhimanyu. In fact, as we speak, Adani Enterprises stock is down by 4%. Anshul is still with us. Anshul, who's actually a mid-cap, small-cap specialist. I'm tempted to ask you, Anshul, how have you been reviewing the earnings momentum in your portfolio? Next couple of years or quarters, or maybe 1 year forward or 3-year CAGR basis, what kind of earnings forecast have you made in your model of your portfolio? Just to understand, has it been scaled down in the last couple of quarters?
Actually, on the contrary, we are seeing quite steady growth for our portfolio companies. Our endeavor is to buy into companies where they're seeing cyclical downturns in growth, and growth actually picks up going forward. So some of these may be cyclical companies, some of these may be secular growth companies where they're going through a temporary patch of slowdown in earnings growth. And so for us and our portfolio, from here to the next 2 years, we are witnessing quite robust growth. And there are various pockets in the markets which are either underappreciated today or not researched enough, where you have growth picking up, but the market is not really focusing on these segments of the markets. And we are really focused on those segments. Let me give you one instance. For instance, the sugar sector. Now, that is a space which has over the years been a very cyclical space, and one has witnessed one thing in particular, which is that the sugar price has been linked to market dynamics, while the sugar cane cost, which is really the key raw material, has been fixed by government. The prices of sugar cane have been fixed by government. But there has been a major change in government regulation for this sector, which is that the sugar price also has been, the minimum sugar price has been now fixed by government. Now, what that does is that while your cane cost is fixed, your minimum sugar price is also fixed. So your sort of cyclical movement in sugar prices, that kind of reduces. The other thing that has happened there is that ethanol blending, that has been raised from 5% to 10%. And also ethanol prices have been raised for certain types of molasses, B heavy and C heavy molasses, their prices have been raised. Again, this is a measure which enhances the secular growth nature of this sector and reduces the cyclicality. As the stock prices today reflect, it doesn't look like the market is taking into account this change in regulatory dynamic of this sector and the uptick in cash flows that this space can see over the years. Also, another segment which will be very interesting is the government companies space, the PSU space. Now that space, because of the cyclical slowdown that we have seen over the last 2 years, has been completely annihilated and forgotten by the markets. But there are quality names in that space which are showing tremendous growth and are trading at very attractive valuations at this time. Now this fear that we are seeing in this space, it is a matter of time when from fear we move towards greed, and when that happens, these valuations will not persist. So our endeavor is to look for such pockets where growth is underappreciated and where the acceleration in growth will reflect in prices. And we do find that for our portfolio in particular, we are not seeing any downgrades in earnings, other than of course 1 or 2 stocks where there are stock specific issues. But generally we are seeing a strong growth trajectory from here to the next 2 years.
All right, Anshul, we'll let you go on that one. That's a very interesting analysis you guys have done for the sugar space. Clearly, the market is not pricing it yet. Let's see how it goes from here on. The reduction in the cyclicality of that space, which has lasted as high as 10 years in the last one. It'll be interesting to see how it pans out. Thanks very much for your time, Anshul.